Hello, good afternoon, everyone. We are here with you today for the webinar on commercial and industrial solar in Sub-Saharan Africa. Thank you all for joining today. I will be the moderator of this webinar. My name is Lydia van Os, and I am the team leader of the Finance and Innovations team at Solarplaza. We are honored to have two great speakers for the commercial and industrial topic with us today. We will listen to their presentations, and you're also invited to ask questions throughout the webinar to them. We have this webinar in anticipation to our upcoming event in Africa. I will tell you a little bit more about that. Let's first discuss the agenda of today. I will start with a brief introduction. Then we will have the presentation on the topic, followed by a Q&A session, and then we will have the end of the webinar. As I was just mentioning, we host this webinar because we will have Unlocking Solar Capital Africa again this year. Maybe some of you already joined one of the earlier editions, because it will actually be the 4th edition already this year. We will again gather over 350 decision makers to discuss Africa's financing and investments questions, opportunities, issues, and everything that is out there. We will have a couple of in-depth discussions divided in different tracks on grid, off-grid, mini-grids, solar financing and development, and of course on commercial and industrial solar. As you know, Solarplaza's conferences, we always spend a lot of time matchmaking. For that purpose, we have our customized software that you can use during the interactive networking breaks to invite people and set up meetings. And this year, we will have this conference in one of the key hotspots of Africa, which is Dakar, Senegal. As you know, we move the conference every year. This is the 4th edition, so finally we are happy to land in Dakar. A little bit about Solarplaza. We want to positively impact the world by accelerating the sustainable energy transition. We were established in 2004, and we celebrated our 15th anniversary recently. We are based here in Rotterdam and organized over 100 events in more than 30 countries worldwide. We have a network of over 60,000 people, PV professionals, investors, developers, manufacturers, etc. Everyone active in this space. And with them, we share reports, white papers, webinars, and network. A couple of practical notes before we dive into the content of this webinar. If you face any technical issues, we're here to help you. Please make use of the chat box on the right side of your screen. You can post any issues that you face, and our team will try to help you. If you have questions, use the question box. There's a separate question box for your questions also on the right side of your screen. Please ask your questions during the presentation. So don't wait till the end. You might have forgotten your questions actually. So just when you have one, post it in the question box, and we might touch upon them at the end of the webinar. But please feel free to post them throughout. The presentation slides and recordings will be made available for you after the webinar. We need some time to prepare that, so give us a couple of days, but you will receive an email with everything, so you can listen back to it or either share it with your colleagues after the webinar. So as I just mentioned, we're here with two great speakers. I would like to introduce them to you. So we have Antoine Prédour on the line. He is Head of Energy Debt at responsaAbility. Antoine has over 15 years of experience in investing, debt and equity, business development, fund management, and credit risk management. He holds a degree in business engineering from UCL Mons, a European Master of Microfinance from Solvay Brussels School, and is a certified international investment analyst. And then the second speaker of today is Takehiro Kawahara. He is Frontier Power Senior Associate at Bloomberg New Energy Finance. And after engaging in research and analysis for Japan's renewable energy sector, he joined the Frontier Power team of BNEF in Feb 2017. His team covers off-grid, weak grid energy sector in emerging markets, including microgrids, solar diesel hybrids, captive generation, and portable and short-term energy. Takehiro completed a master's degree in environmental studies and sustainability science at Lund University in Sweden, and he worked in Japan Science and Technology Agency. So we are very honored to have you both on board, Antoine and Takehiro, for this presentation of today. We would like to open the webinar with two statements that Takehiro and Antoine will briefly discuss. If you are listening into this webinar and you want to say something about this statement, or if you already have a question about one of the statements, you can post them. If we have time, we might briefly touch upon them before starting the actual presentation. So the first statement is decentralized solar is getting traction in Sub-Saharan Africa. I want to invite Antoine and Takehiro to now elaborate on this statement. Please go ahead.
Mm-hmm.
Yes, good afternoon, everyone. This is Antoine from. This is Antoine. Yes. No, decentralized solar is really getting traction in Sub-Saharan Africa, meaning that if you look at the figures, and the installed capacity is quite low at the moment, but we saw in the past years that this is really something which is happening today. We see more and more project developers. We see regulation changing, and we at responsaAbility feel that it's definitely getting traction, and that's a segment that we as an investors want to develop. But we also believe that there are more and more companies involved into this. So we are quite excited about what is happening now and today in Sub-Saharan Africa.
Yeah, so that's right. It's interesting to see what is happening in the decentralized solar market in Sub-Saharan Africa. And in particular, in this presentation, we focus on commercial industrial solar. And there are mainly three key drivers we have seen, which are firstly, economics of solar compared to other type of generation or grid electricity, and outages, particularly the challenges in Central and Western Africa, and environmental sustainability, which we can dig into that in the following presentation.
Okay, thank you very much, Takehiro and Antoine, for your reply on this statement. I want to really engage the audience. I see people still have to find their way into the question box. If you have anything to say about this statement, please know that you can post your questions or your replies to the statement in the question box. Then we go to the second statement. The C&I market remains small in Sub-Saharan Africa, but a large potential exists and the market has started taking off. Okay, Antoine and Takehiro, your take on that?
Sure, so I can go ahead. Yes, so solar costs have been declined globally speaking. And if you, for example, if you look at the developed economies, you have already seen traction of on-site solar, not only for residential customers, but also C&I customers, even several years ago. But in Africa, the movement is a bit slower compared to other regions. However, we have seen attractions in the last couple of years, and we believe that the market is going to take off even more.
Thank you, Takehiro. Antoine, do you want to reply to the statement as well?
Yes, I mean, for me, what is important is to put this in perspective with what has been done with utility scale in Africa. And if you look at the past year, despite the entire and the I would say large immense, so huge energy deficits that you have in Africa and some crumbling in infrastructure, utility scale solar markets, I would say they struggle to grow. We've seen projects, but installed capacity is still pretty low compared to to the potential. And if you look about at the reason for that, one can think about administrative delays. You could think about unbankable PPAs, but also on difficulty to secure lands. And we see C&I, and I'll come back to really the definition of C&I soon. We see C&I as one of the solutions for developers that hope for fewer, I would say, administrative delays, but also a stronger offtake agreement, so that they can really pitch to C&I customers directly and not go through a very lengthy process of signing some PPAs with utilities. So for us, yes, there's quite some potential, and we only see this as a start in Sub-Saharan Africa.
Okay, thank you very much. There's one question coming in about energy storage. Maybe we can briefly touch upon it. What about energy storage? Renewable without storage has no future. That's a question someone is asking.
Yeah, I can take that. It's actually depending on the markets, energy storage is the must item already. For example, we study 3 countries in this project, and then Nigeria is one of them. Because of the significant outages, the customers in the C&I sectors usually have diesel genset or diesel genset plus energy storage. Whereas in some countries, energy storage is not a common item, but depending on grid energy situation as well. So if the grid electricity is more reliable, the typical configuration is grid electricity plus solar, and then diesel genset as a backup. But interestingly, some developers also mentioned that they are very interested in offering energy storage in near future because of the rapid cost declines of the lithium-ion battery. And then we also think that after some years, the configuration of solar plus battery will be more common than today.
Okay, thank you very much for replying to the question. I propose that we now go ahead with your presentation to provide everyone who's listening in with a deep dive on this topic. And to the attendees, I would like to say continue to ask questions, just post them throughout the presentation. So right after the presentation, we're ready and here for you to answer your most burning questions. So feel free to drop them in the question box. Let's go to Antoine, who is going to speak first, followed by Takehiro. Together they will provide the presentation. Takehiro, feel free to go ahead.
Yes, this is Antoine. So very, very brief on responsibility. We are an impact investor, and we are active in only in developing countries. So we are quite active in Sub-Saharan Africa, I mean in microfinance, agriculture, and energy. And out of the 3 billion assets that we manage, 25% is roughly invested into energy, which has been a very growing segment of our investment activities. And of course, Africa is a big share of our investments. Let's go directly into the topic, because the title of this presentation is about the potential of C&I in Sub-Saharan Africa. But first, let's ask ourselves the question: what is C&I? C&I stands for Commercial and Industrial Solar. Here we are talking about all decentralized solar solutions that provide energy to universities, to factories, to mines, to farms, to branches of banks. So really small systems from 30 kilowatt to 1 megawatt, roughly speaking. It could be either a rooftop solution or a ground-mounted solution, but decentralized really means that the electricity is consumed where it is produced, so that those off-takers, which I just mentioned, those factories, mines, farms, etc., they can really consume the electricity that they are producing. This picture that you have in front of you has been taken in Ghana. This is one of our investments, Redavia, and this is providing electricity to RMU, which is the Royal Maritime University. If I look at today what we have in the sector, and most of you know that already, you could divide the sector into really 3 segments. The first on the left-hand side is the residential solar with all the solar home systems, with a very small system from 1 watt to 1 kilowatt, with most of the system ranking from, let's say, 100 watt to 200 watt, where we play really the access to electricity. That's where we're providing access to electricity to households that don't have access to electricity today. If you look at the right-hand side, you have what I mentioned earlier, all these utility scales projects, which are more the larger projects, which are with off-taker as the national utilities. And then we have now the C&I, which is in between those two, which are, as I said, decentralized, and which provide solution to many companies that today don't have access to reliable electricity, but also help them get access to cheaper sources of electricity. So this picture that you have in front of you is typically what we are talking about when we discuss the range of solar project that we have in the market. Why we as an impact investor are we presenting today about the potential of C&I to the market? We are in the process of launching a new fund that will focus mainly on off-grid solution in Sub-Saharan Africa and Asia. And when we went and we did the business plan to launch that fund, we realized that there were no really study available for project developers in Sub-Saharan Africa. If you look at the market today in Asia, this C&I segment is really booming. We see a lot of projects, a lot of companies, countries like Thailand, Malaysia, Cambodia, or India, of course. You see more and more projects. But when we digged into the report and met with project developers, we really realized that there were data points lacking. So we had the idea to commission Boomberg New Energy Finance, and therefore my colleague Take will present the report afterwards. They started to analyze a bit more the market potential for C&I-solar in Sub-Saharan Africa. So what did they do? They looked at 15 countries, and they looked also at the dozens of indicators, and then they ranked those countries on 3 broad criteria. The first criteria was the economics, where on-site solar would be the cheaper option than the grid or the diesel, because most of the electricity today is still generated by diesel. They looked at electricity tariffs, they looked at electrical outage, the diesel generator market. So where is this potential? The second criteria that they assessed was the suitability of the regulatory environment. In which countries today in Sub-Saharan Africa is C&I solar or have C&I solar friendly regulation? Which countries have barrier for C&I solar? This is quite important because regulation plays a huge role for utility scales, a bit less for the solar home system. But on the C&I, where do we stand in terms of regulation? That was also an important criteria for our colleagues from Boomberg New Energy Finance to look into. Then the last criteria they looked into was the market momentum. Where are active market for C&I solar today in Sub-Saharan Africa? Where do we see momentum? Where do we see, when you look at figures of PV import from China, what are the market size? What is the potential for project developers to go into? Because that's what we want to achieve with that report, is provide those data points. So they look into those 15 countries I mentioned, and then they shortlisted 3 countries, which are Kenya, Ghana, and Nigeria, and went deeply into the details for those 2 countries. I think I will let now Take to complement on the research.
Thank you. So let me briefly introduce what we are doing. So Boomberg NEF, it used to be called Boomberg New Energy Finance, but now we call it Boomberg NEF because the energy research coverage has expanded. So we are a market intelligence service provider within Bloomberg, and clean energy, which is the right above on this slide, is one of the core sectors that we look into. And then within clean energy sector, we have a team called Frontier Power, which covers distributed energy in emerging countries, and I belong to that team. And we also collaborate with other teams to produce research. And in short, the team cover the technologies and business models used to achieve energy autonomy at the frontier of the grid, which includes off-grid solar, on-site energy for commercial industrial customers and infrastructure, and microgrids. And I'd just to recall what Antoine said previously. So we have been tracking project records for different energy sources in Sub-Saharan Africa. And as of November last year, we have identified 420 megawatt of solar power plants selling electricity to the grid. And then this is just 0.5% of annual installed solar capacity in 2017. On the other hand, if you look at right-hand side, which is the C&I-solar, which we identified in this research project, there was 74 megawatt installed capacity. So the message I want to provide here is developers have struggled building utility-scale projects for multiple reasons, including land acquisition, high off-taker risk, and difficulty to get financing. It's generally speaking, it's slow to commission the project. Whereas we have seen that on-site solar project for C&I solar customers, they are relatively faster to deploy, even though there are some barriers existing, which we can dig into later. So what this chart shows the market tractions in the last several years. And we have seen the market has started penetrating in the Sub-Saharan Africa region. The data shows that from the companies we interviewed shows that it started to kick off in 2017 and then accelerated in 2018. I'd like to show who are using on-site solar in the commercial industrial sector. And if you look at the left-hand side, you can see that mining is the largest sector in terms of capacity installed, which is because of the sites there have larger power demand. And then average size of the on-site solar for mining site is about 6 megawatt per site. But if you look at right-hand side, which is the number of projects by customers, there are more diversity you can see. And manufacturing customers, public buildings, including schools and hospitals, offices are major customers out of the 110 projects we identified. And the average project size varies from 91 kilowatts for horticulture sector to 450 kilowatts for manufacturing. On this map, you can see C&I solar project installed by country. And we identified Nigeria, Kenya, and Ghana as the most interesting markets in this research project, as we see more penetration. Burkina Faso, Namibia, and Eritrea also have larger capacity installed, but they are because of single mining projects. I mean, single solar projects for mining customers. In earlier statement, we mentioned that there are 3 key main drivers for the penetration of C&I solar in Sub-Saharan African region. And then firstly, about economics. So if you look at this chart, and we line up grid electricity tariffs for commercial customers in 15 Sub-Saharan African countries, and they range from 0.016 to 0.247 US dollars per kilowatt hour. If you then overlay what the cost of the kilowatt hour from solar is, which is the yellow line, you can see that roughly half of the countries on this chart, solar makes sense economically. And then this chart compares cost of electricity by technology and by country. The cost of solar ranges significantly, as you see. And I would like to mention 2 important things here. So one is that cost of solar is reduced when customer operates 7 days a week rather than 5 days. So what it suggests is customers such as manufacturers or shopping malls, which tend to operate 6 or 7 days a week, they would be more favorable for on-site solar from economic perspective. The second point is, if you look at Nigeria, where grid electricity is not reliable, customers always use diesel gensets and battery storage to bridge outages. So if you add solar with battery storage, that is more expensive compared to the grid electricity. However, compared to the diesel genset cost, solar plus battery is more economical option. So that is the driver for the penetration in Nigerian market. And according to the World Bank data, we have seen that outages are a significant challenge across the continent, and particularly West and Central African countries. Manufacturing customers and commercial customers say that more than 40% of them say electricity is a major constraint for their businesses. The constraint means that frequent and lengthy outages or voltage fluctuation, which affect their business operation and their sales. If you look at Nigeria, Nigeria heavily relies on diesel gensets, as I mentioned, because of the outages and off-grid areas. And then this chart shows that on the left-hand side, in 2016 alone, more than half of the installed capacity was diesel and petrol gensets. And the country spent about $16 billion to power these gensets in 2016, which is almost equivalent as the GDP size of Senegal, or just over a third of the GDP size of Ghana. And the Nigerian government, by 2030, they have an energy target showing that the government wants to commit reducing the heavy dependence on diesel and gasoline gensets by over 60%. So that's the reason why we say that Nigeria has a potential for the solar, for C&I solar customers, for the customers to reduce dependence on diesel generators. And the third driver I'd like to mention is environmental sustainability. Multinational corporates such as Unilever and Coca-Cola, they have clear target of using renewable energy in their electricity use. So when you want to buy renewables from the power market in the emerging countries, not only Sub-Saharan Africa, but also some emerging Asian countries, a typical challenge is limited options to buy renewable energy from the market. In such a case, an alternative option would be using renewables on site. And that is what some companies are doing in Sub-Saharan Africa. Now I'd like to mention about the regulations, which is one of the important aspects in this report. So Sub-Saharan African countries, generally speaking, we think they lack regulations that makes C&I solar attractive. Most of the regulations in place are so far designed for utility scale projects. And then this table just shows example. There's almost no net metering policies and feed-in tariffs in Sub-Saharan Africa countries. So it is impossible to sell power to the grid. So that has implications for how a C&I solar installation is designed. Essentially, you need to consume all the electricity from solar on site if you are C&I solar customers. On the other hand, as long as you put the equipment into place that guarantees electricity is not fed into the grid, you can relatively easily to build on-site solar up to 1 megawatt in many countries without a generation license and without telling the utility. But there are also other challenges in terms of regulation we'd like to mention. So in this research project, we asked organizations, which means financiers, companies, or C&I solar sector, about what regulatory reforms they want to have in the 3 markets we visited. So many in Nigeria answered that enforcing import duty and VAT exemption for solar equipment is the first priority. Those 3 countries have a policy to reduce the VAT or import duty for solar equipment, but when it comes to enforcement, which means whether tax officers have correct understanding about which equipment need to be exempted, there are challenges. In Ghana and Kenya, 10 organizations said that they want to have net metering, which have been discussed for several years. But other regulatory challenges that are not in this chart are, for example, one limitation is whether C&I solar developers can sell electricity, irrespective of whether it is produced on site or sold via distribution grid. So this can be a hurdle if an asset is located at the customer site, but owned by a separate electricity service company. Another example of the regulatory challenge is that a strict local content rule. This is particularly for Ghana. In Ghana, the local content rule mandates certain share of local participation of use of locally sourced equipment for power plant projects, including C&I solar. But given the fact that many key equipment are from abroad, for example, PV modules or inverters, such a rule may prevent new non-Ghanaian entrants to participate in the Ghana market. Now, I'd like to pass to Antoine to discuss the business models.
Yeah, thank you, Taki. I think what is also important to look into is the different type of financing for those projects, because the potential is one thing, but how do you scale that up and how do you finance that potential? The report highlights the 3 financing models that we see in the market and which I believe exist. The first one is what we call direct purchase. So what is direct purchase is quite simple. The customers buys the equipment and owns the equipment after buying it. That's quite clear. What we see most of the time is that typically they would pay about 20% upfront before the construction. Then the customer would pay 50% midway through the construction, and then the balance of the system would be paid upon commissioning. So that's something that type of financing that we see often in Sub-Saharan Africa. This is simple. Direct sales have proven, I would say, popular for different reasons. If I look at the report in Nigeria, most projects have been less than 30 kilowatts, so rather a small project. And most of the customers that buy the system have low credit. What do I mean by low credit? They are not so bankable. They don't have so much relationship with third party, like a bank or financing institution. So they have to buy those systems on cash, so directly the project. That's one reason. Also, and that's, I think it's important in Sub-Saharan Africa, companies are used to own. Today, they are getting electricity through diesel generators, and they own those diesel generators. So as the C&I-solar is an alternative to the diesel generators, then they basically continue buying the system as they used to do for the diesel gen set that they were using. Also, what we see in the market is some tax incentives. In the report, we speak a lot about Kenya, where companies get tax credits for buying those systems. So those are, I would say, incentives for those companies to buy directly the project. In some cases, however, we see developers that provide some initial financing for a period of few months after commissioning. Why that? And I think that's an important point, is that today we still need to convince the client to buy the system. So they want to make sure that the systems works before they basically pay the last invoice. And how do they do that? Then the developer pre-finance the first months of operation, the system start producing electricity, and then they release the the invoice. This is something that we have seen quite a bit, and which has proven to be quite problematic in Sub-Saharan Africa, because yes, there is potential, but also there is a lot of education to be provided to the client. When this direct purchase model doesn't work because of limitation which are clear about size, if the size of the project are too big, you can't really pay upfront and spend hundreds of thousands or sometimes millions to pay the system upfront. So the second option would be through corporate PPAs, power purchase agreements, where customers, they buy the power supplied by a PV at a fixed price per kilowatt hours over, of course, a specific time frame. So they commit to buy the electricity at certain price for a certain period. This has really been used, I would say, today. We don't see so much of those corporate PPA. One limitation is because you need most of the time licenses for this. So the corporates needs to have the license to, not the corporate, so the project developers needs to have licenses to sell the system via this type of financing. But also when I look at off-taker, they prefer sometimes not to capitalize the energy expenditures, or they prefer to spread also the payment of the system over a longer period. A model that we see more and more is the last one, which is the leasing or the rental, which is, I think most of you would be aware what leasing means. You just pay a fixed price per month to use the system, whatever the electricity that has been consumed or produced. So it's you know the cost, and you pay every month for a fee. I mentioned for the PPA that one limitation comes from the licenses. For leasing, most of the time you don't need licenses, so it's a way to make this easier to get directly into the leasing agreement. It's easier than having a PPA. But also what is quite important is that in those countries like Nigeria, cost of electricity could be moving quite often, could be quite volatile, and the leasing agreement, you know exactly how much you pay. Often in a leasing agreement, at the end of the lease period, the company can own the assets. Hello. Speaking about financing, financing remains a key issue for most of the project developers in Sub-Saharan Africa. And why though? Most of the financiers have focused on larger scale projects. I mentioned the utility scale project, which are tens of thousands of $million per project. That's where the focus has been from DFIs, from local banks, for multilateral banks. But also because the financiers, they don't want to finance smaller projects. It's very time consuming, it's difficult. Legal fees can be quite expensive to finance this project. And there's been very few portfolio of projects. What do I mean by portfolio of projects? You could look into a company that has multiple sites, or in the regions, you aggregate different projects, you put in a portfolio, and then you would finance that portfolio. We have seen few of those financing opportunities today, or financing means today, and we believe that there will be a way to scale up the market if the financier move more into financing portfolio of project. I think that aggregating customers is critical to finance a portfolio of project, also because of mitigation of risk, but also it will help the developer or those project developers to raise capital, because you would be much more interesting for financiers, for equity investors, if you can provide a portfolio, and then you can raise more capital, and then you can also develop more potential in the markets. The second point on the lack of financing is I would say whether similar. Most PPA or leases today, they have been financed through developer equity. So it's clearly there's a lack of financing in the market, and we need, as investors, to be more active into that sector if we want to unlock the potential of the market. The third point is an important one, and I already mentioned that in the previous slide. Customer education takes a lot of time. What does that mean? It means that if you really want to scale up, if you want to have a larger project, you also want the customers, and you want that you can deploy systems to smaller companies. You need to educate the companies. You need to make sure that they understand the potential, that they are confident with the technologies, so that the project developers can sell more systems, and then prove to the financiers that there is portfolios, that there is plenty of potential and clients that can be financed. Today in the market, we see very few local banks active in the market, to some exceptions in some countries. But I would say that today the local banks are still reluctant to look into this sector, which is rather early stage. Also, what is important is that to finance those type of projects, you need rather long-term maturities. Local banks today still provide loan tenors between 2 to 3 years most of the time. And for that type of project, you would need to look at more 6 to 8 years maturity. So definitely that's something that local banks are getting to look into, but we see little appetite for the moment. And then last but not least, it is a challenge at the customer side to prove their credit, in the sense that information is sometimes lacking. They need to provide information to the project developers to have history of energy bills, how much they have spent on energy in the past, and it's quite difficult for those project developers sometimes to assess the credit. Of course, you don't have credit ratings for those smaller companies, and that's clearly something which is hindering the growth of the market today. A bit as a conclusion of this report, and I invite everyone to really go into the details. It's a very long report, but as a conclusion from or introduction, it's just an introduction to the report. Through C&Is, companies can achieve significant savings. Taki mentioned in some countries the cost of electricity could be as high as 3 times as what we have in Europe. So cost savings can be significant compared to what they pay for the grid, but also compared to what they pay for the diesel generators that they're using. So that's really something which is driving that market. Sometimes, as Taki mentioned, also company wants to have more of a sustainable footprint and show that they use clean energy, but the main driver today is still less cost, plus, and that's important, the reliability of the system. We mentioned in the presentation that that energy access to reliable energy is a constraint for 44% of the SMEs. That's key. If you're the MD of a factory, you don't want that the electricity just stops. You want your production line to keep on running, and this is also quite important. We mentioned this as in the opening. The market is potentially huge. The market is expected to double again in 2019 and grow further in 2020. If you look at the last 2 years, most of the installed capacity has been developed in the last 2 years, so the market is really starting to take off. Also, what here it's important is that we are speaking most of the time about self-consumption. So we are not speaking about companies installing solar plants to sell to the grid. We don't see that too much today. The need is really for self-consumption today. And what I just mentioned on the fourth bullet, sales cycle or shortening, because more and more education is brought to the client, but there's still quite some work from the project developer, from the market, to convince clients about those technologies, because they're quite reluctant. We believe that as soon as there will be more and more education, there will be an inflection point where the neighbors will see his neighbor and they will all install solar panels because they will have good experience with the system. And the last point is, yes, today we say there's a lack of financing. Developers have mostly finance the project through equity, and we don't see too much of a debt capital in the market. I conclude on these slides. If you want to find a full report, which is I think more than 80 pages of detailed analysis, you can click on the link, or you can also find a report on responsaAbility website, and I would think also on Boomberg website.
Thank you very much for your presentations, Antoine and Takehiro, and for all the insights that you've provided, and to summarize some key findings and on this interesting topic that are mentioned, of course, in the full report. You can check now the chat box for the link to download the full report. If you're interested to learn more about the details and read through everything that was just mentioned in the presentation, or take a moment to to really go back to the details, download the report, look in the chat box for the link, and then you get all the information that you need. Okay, so now we will go to the Q&A. And during the Q&A, you can ask questions to Antoine, Takehiro, but also to Peter Page. He also works for responsaAbility, so everyone will be answering your questions. There have been a couple of questions coming in, and I will go over some of them. I will just ask one of the speakers to reply to the question, but of course, feel free to pass it on to the other person if you don't feel like answering. We can figure out who can best answer the questions that are rolling in. First, I want to start with a question for Antoine, because it was coming in during your presentation. The question is how to scale C&I to become profitable. It seems that there are mostly very small projects still.
Well, small doesn't mean that you're not profitable. I think what I try to explain is that you need to develop portfolios and prove track record, because it's all about getting financing. If you look at C&I, there's a lot of pre-financing by the project developers, and to get this pre-financing, you need a track record, and that's a bit the chicken and an egg. So here, what is important is to try to have a diversified portfolio, show some track record, and then the financing will come afterwards, and then you can really scale up. I think this is quite important, and a key for the sector.
Maybe this is Peter Page, just to add on this point. I mean, the underlying economics of each project is reliant on the tariff that is charged to the customer. So if, let's say, the developer is charging a discount to the grids, the price of the grids or an alternative source of electricity like the diesel generator will determine effectively what is the highest price the developer can charge to their customer. So if, let's say, in Ghana, for example, where you have a high grid tariff, the developers can charge a much higher price in their power purchase agreement or in their lease agreement. Hence, the profitability of the project is much higher. If you look at Thailand, for example, other countries where, or in Sub-Saharan Africa, other countries where the tariff is much lower, their profitability is much lower on for the project. So the underlying economics of the projects are linked to these alternative sources of electricity.
Okay, and then we have one question that is actually linked to the first question, because it's also addressing smaller scale. The question is, how are developers addressing the financial issues related to the small scale of C&I, as lenders are less inclined to finance small scale projects? I think you already touched upon it, but maybe you can.
So yes, as Antoine mentioned, most of the projects are financed by developers' equity. But if I add one thing, which is also discussed in the report, is in Kenya, there are a few local banks are offering the financing for C&I customers to install on-site solar, which is under the program supported by a French development agency, AFD. So this is the program called the Sunref program. So that allows the Kenyan local banks to offer lower interest rate and relatively longer tenor for C&I solar project development. The scale is still small, but that's one option that some developers are using in Kenya market.
Yeah, I think thank you, Taki. What is important is also to develop more and more off-balance sheet financing with SPV dedicated to the portfolio. I mentioned it's important to develop portfolios of projects so that you finance those portfolios of projects. So this is pure non-recourse finance. And we need, as an industry, also to come up with standardization of contract, because what takes a lot of time to structure is the contract that you put in place, but also the cost attached to it. So as an industry, if you manage to standardize a bit those contracts and for financing those portfolios, that would be quite important. Also, what will be important is that the financiers, the banks, that they commit to some amounts that the project developer would draw over time, because what is killing sometimes a project, that if they receive a loan, they start paying interest rate as soon as they receive the money on the bank account. But if you, of course, do commitment and the project developer can draw progressively the funds as they build the pipeline, as they build the portfolio, we all know that it takes quite some time, especially in Africa, to build those pipelines. There's always delays. The financing needs to provide the flexibility that the project developers need to develop progressively those portfolio, because going too quick is never a good thing. You need to do a good job, and if you have the pressure from your financing to grow too quickly, this can be quite problematic for the sector.
Exactly. Okay, there's also one question coming in more related to the definition of C&I solar. The question is C&I solar always decentralized? And what is then the difference with a mini-grid? Is it just the fact that the power is used only by the C&I customer? Who would like to answer that question?
Yeah, I can go ahead. So, yeah, I can go ahead. So in this project, we define C&I solar. C&I solar is basically a decentralized. It's used behind the meter, or it's used on site, such as rooftop or customer site. And then question about how it's related to mini-grid or microgrid. We call mainly microgrids. I mean, C&I solar projects can be a part of mini-grids or microgrids, depending on what customers are included as an off-taker of the mini-grids or microgrids. But the key point for mini-grids or microgrids is it's more about the functions, or how many distributed generation sources or energy sources are included. For example, most of the C&I solar projects we have seen in this project are on-site solar plus grid electricity, or on-site solar plus diesel generator, but doesn't necessarily have a function to operate independently from the grid. I mean, in the Nigerian case, developers offer on-site solar plus battery plus diesel for the customer, so they can supply power even though there's disruption to the main grid. So this you can call microgrids. And then the microgrids we usually define is whenever there's a disruption to the main grid power systems, you can disconnect and get power supply independently. And usually microgrid system has more than one distributed generation resources to be incorporated. So it's not completely different. It's I think it's C&I solar can be a part of microgrids, but then it's not equivalent.
Okay, thank you.
Yeah, I mean,
yeah.
Now, to complement, I mean, I think in Africa we see very few feed-in tariff. I mean, there are a few, of course, but also there are plenty of small factories, and you know, we mentioned mines that are very remote. By the simple fact that they're far away from the cities and so on. That's why we also focus on this report on the decentralized potential, because especially in Africa, the grid did not reach all those small factories, universities, and so on. So that's why decentralized is quite important.
Okay, thank you very much. Then we go to the next question. And the question is, don't you see the local utilities as a threat for the sustainability of the C&I market? Utilities, especially the weaker ones, have no interest in losing revenues to private developers, while they could potentially charge higher tariffs to their C&I customers. Very interesting question.
So, if I may, I can go ahead. Yeah, that's a relevant question, particularly for Ghana. So Ghana has been discussing implementation of the net metering policy, and then the local utility has feasibility study of the potential impact of net metering policy for their revenues. And then based on that, they didn't see very positive because of the potential loss of sales. So for the last several years, they have been discussing the policy, net metering policy, but it's still on hold because of potential effect to the utilities revenue. So that's relevant.
Okay, thank you for answering the question. We already have to go to our final question because time is almost up. I know that there are more questions out there. Please feel free to still reach out to either one of us after the webinar if you have a question left that is unanswered at the moment. But to finish this off, I would like to pinpoint out the last question about self-consumption. It's basically a statement. So if you will have more and more companies going completely off grid, wouldn't you expect that this in the end will lead to higher grid fees?
Okay. So I can go ahead. So I think that means, yeah, I think it's ultimately if there's a lot of penetration of self-consumptions, like the case of some developed countries, there can be recharge. But in Sub-Saharan Africa, I think we don't see that such a high penetration of on-site solar yet as some of the high-income countries, like Australia or some of states in the United States. And then I think my thought is, even though C&I solar customers, C&I customers use on-site solar, they still use a grid electricity mainly, of course, depending on how grid electricity is reliable. But I don't think they will completely off-grid if they're in major urban center or if the grid electricity is reliable enough.
Yeah, and maybe to complement, don't forget that we are speaking about rural areas where the grid is not reaching those small companies, and will probably never reach those small companies. So there's plenty of companies that are off grid today already that run on diesel solar, and I don't think that the grid would make the big investments to get there. So that's what we are talking about. It's a huge potential, and the investment is huge. Think about the mobile phone. In Africa, they switch directly into the mobile phone. They did not build those fixed line fixed telecommunication lines. Sorry. So they went directly into the mobile. We believe that in some regions which are remote, the grid will never get there, and they will go directly into decentralized and will remain decentralized.
So by answering this final question, we are also at the end of the webinar. I would like to quickly mention our upcoming events before Unlocking Solar Capital Africa. We also have our conference in Ethiopia focused on the Ethiopian market, utility scale, and commercial and industrial. And then later this year, we have a conference about the Nigerian market as well. But of course, this webinar is mainly hosted because of Unlocking Solar Capital Africa, and which already has the 4th edition this October in Dakar, Senegal. I want to thank Antoine Prédour and Takehiro Kawahara for their great presentation. Thank you very much for taking the time to learn us more about this topic and also answering questions from our attendees. I wish everyone a great day, and I hope to see you later this year during Unlocking Solar Capital Africa.
Thank you.